Over the last 30 years, field of catastrophe loss modeling, which is also referred to as catastrophe modeling or CAT modeling, has revolutionized the way the insurance industry quantifies risks, prices risks, and develops risk transfer solution and manages the portfolio of risk that it underwrites. This field has evolved after a number of insolvencies in 1980s linked to some major catastrophes in Europe and United States. You can look at evolution of catastrophe risk model by perils that are covered, by regions that are covered, by type of applications that are covered, and also a variety of cooperations that have been forged over the years to really enable expansion of these models globally. These models are also applied in the area of agricultural insurance, capital markets, particularly linked to CAT bonds, catastrophe bonds, by public sector in areas of development planning and emergency management, and also in the area of natural infrastructure, namely management of mangroves and other natural infrastructure that serves as a buffer for protection of society. As part of the work that we've done here at the Geneva Association, we have convened thought leaders of the field of catastrophe risk modeling, together with leading climate scientists and a number of representatives from different sectors, to really come up with recommendations as to how we can leverage catastrophe risk models for the future needs and applications. And we have put forward three types of recommendations. The first recommendation is how can we leverage the models that we have today to further address some of the applications and expand these models to other areas. And this is particularly important for applying these models to emerging countries and low-income economies where the risk is high, and these models can really help governments and the insurance industry in designing better risk management solutions and risk transfer solution, and particularly addressing the protection gap. The second type of recommendation is there is need to enhance catastrophe models based on the latest development in field of climate science and conditioning these models to climate change scenarios. Third area is rethinking how we do catastrophe risk modeling in terms of what we need in the future, and that is moving towards more systems-based thinking, where through utilization and expansion of these models, we can look at the cascading effects and impacts of extreme events along the areas such as supply chain and interconnectivity of various sectors that could be captured in a model.